In the name of Allah, who is the most merciful and kind. Assalamu alaikum. I am here, Hamadullah Jama, student of PBA 2K19 from University Campus Larkana. As Sir GM Shaikh gives us video presentation, so I am here elaborate my video presentation, and my topics are: first one is partnership, so I will tell you about what is partnership and liquidation of partnership, and third one is corporation, and I will tell you about what is corporation and how we can start corporation. Receivables, so I will tell you about receivable accounts and notes receivables. So first I will tell you about partnership. What is partnership? Partnership is a second form of business. Partnership can be managed or owned by more than one person. A partnership is often said is a formal arrangement by two or more parties to manage and operate a business and share its profits. There are several types of partnership arrangements. In particular, a partnership business, all partners share liabilities and profits equally, while in others, partners have limit. A business partnership is a legal relationship that is most often formed by a written agreement between two or more individuals or companies. The partners invest their money in the business, and each partner benefits from any profits and sustains part of any loss. So after partnership, I will tell you about advantages of partnership. That what are the advantages of partnerships? Here are some. First one is easy to form. Easy to form. It is often said that partnership is easy to get started. The partners can agree to create the partnership verbally in writing. And second is allows several people to combine their experience and talent. What? Allows several people to combine their experience and talent. Each partner will bring their own knowledge, skills, experience, and contacts to the business, giving it a better chance of success. And here third is allows several people to combine their financial resources. Allow several people to combine their financial resources. There are different partners in business and can bring huge amount of financial resources. So after advantages, I will tell you about I'll also tell you about disadvantages of partnership. So in disadvantages, the first one is has unlimited liability. Each partner is individually responsible for the debts of the business. The partners are personally liable for debts and losses increased. Has limited life. Has limited life. What's mean by limited life? A partnership dissolved when any member dies or decides to leave the firm, or when a new member is admitted to the firm. So we call it has limited life. So after first topic, I will tell you about my second topic. So my second topic is liquidation of partnership. So I will tell you about what is liquidation of partnership, what's mean by it, And if the partnership decides to liquidate, the assets of the partnership are sold, liabilities are paid off, and any remaining cash is distributed to the partners according to their capital amount count balance. When we sold the assets, the business at minimized cost, their process is called partnership. Liquidation of partnership happens due to wind up of partnership. What? Liquidation of partnership happens due to wind up of partnership. A liquidation marks the official ending of a partnership agreement. To end the partnership, the parties involved sell the property the business owns, and each partner receives a share of the remaining money. After my second topic, the third topic is corporation. So I will tell you about what is corporation. And corporation is the third form of business which is started with the permission of government. If government allows to create a corporation, then we can. If not, or not. Corporation has legal status or working as separate legal entity. A corporation is an organization, usually a group of people or company, authorized by the state to act as a single entity, a legal entity, and recognized as such in law for certain purposes. So here I will tell you about how we can start corporation. First one is interior max prospectus. The investors actually make a plan called prospectus throughout the established corporation. The prospectus depends on different things which go in favor of investors. Benefits of earning success. And second is equity financing. Equity financing is written evidence that investors have invested money in corporation. It is an evidence. It is like a proof of investors. Means they have proof that they invest money in the corporation. Particular certificate. What do you mean by particular certificate? Particular certificate, a person who deposit money, this will be given by company to that person. Means which money is invested in a person, the company will return to him. So here I will tell you about how we can start corporation. Interior max prospectus. The investors actually make a plan called prospectus throughout the established corporation. The prospectus depends on different things which go in favor of investors. Benefits of earning success. Equity financing. What's the meaning of equity financing? Equity financing is written evidence that investors have invested money in corporation. It is like a proof of investors. Means they have proof. Equity financing means they have proof that they have invested money in the corporation. So after equity financing, there's an other point, that is particular certificate. Particular certificate, a person who deposit money, this will be given by money to that person. Means a person is deposit their money to corporation will return his money to him. After third topic, my fourth one and last is receivables. What is receivables? There are two receivables in accounting. There are two receivables in accounting. First one is accounts receivable and second is notes receivables. So first I will tell you about accounts receivable. Means what is account receivables. So here I will tell you about accounts receivables. Accounts receivables are legally enforceable claims for payment held by a business for goods supplied and services rendered that customers or client have ordered but not paid for. Means client or customers have ordered but not paid at that time. He will pay in future. Accounts receivable is shown in a balance sheet as an asset. It is one of a series of accounting transactions dealing with the billing of customers for goods and services that customer has ordered. Means it's a condition that customer is ordered for a product. They will deliver a product and get cash. So after account receivable, there is another topic of receivable. That one is notes receivable. So here I will tell you about notes for notes receivables. What is note receivables? Note receivables represents claims for which formal instruments of credit are assigned as evidence of debt, such as promissory note. The credit instrument normally requires the debtors to pay interest and extend for time periods of 30 days or longer. Notes receivables are considered current assets if they are to be paid within 1 year, and non-current if they are expected to be paid after 1 year. The credit instrument normally requires the debtors to pay interest and extend for time periods of 30 days or longer. A note receivable is a written promise to receive. A note receivable is a written promise to receive a specific amount of cash from another party on one or more future dates. A note receivable means that it's a promise to receive a specific amount of cash from another party on one or more future dates. So in last, I would like to thank Sir GM Shaikh who gives me this good opportunity to create a video presentation. Sir, I am very thankful to you, and I hope that my video is good and you will like it, inshallah. and I will try my best. And thank you, sir. Khuda Hafiz.